The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks. Welcome here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and checking out a few different things right here. But right now, let's go ahead and do a quick market wrap. We got the S&P down 7 points. We got the Nasdaq down 14. We got the Dow down 65, and the Russell down 4. Markets pulling on back. Also, we have gold up 14. We have copper barely moving right now. We got silver moving up quite a bit, up over 1% on the day, 1.25% right now. We got corn up $5.75 there, 5.75. And we got soybeans flat on the day, just up $1. And looking over at oil, it is down a mere 25 cents. Natural gas is down almost 1.5%. Euro dollar down 50. Pound dollar down 76. Aussie dollar, I got some new glasses there. Aussie dollar down 14 and U.S. yen down 58, with the U.S. Canadian up 9 and U.S. franc up 36. With the dollar index showing positive, the dollar gaining against all the major currencies right there. And I'm looking just to, like I said, across the board, seeing what's going on. One of the things I was looking at, you definitely may want to check this out, is see here if I can put a little drawing tool on here, but basically the best thing I can do, I think it'll let me do this. Okay, here we go. So yeah, that's not gonna work, but all right, I know there's one of these tools that will work perfect. Let's see, there we go. All right, found it. Okay, just get rid of that and get rid of that right there. And what I want you to notice is something on here. This is something you could definitely be looking at in the future, just for a little clue on the open. That definitely could have helped you out in your trading today. Is look at the VIX, okay? And if you've traded the VIX for any period of time, you know that the way the VIX works is basically it's the fear index. Options go up as fear rises, as more movement is expected. And notice how the VIX goes down for the day, the VIX goes up for the day. That's what should happen. But yesterday, okay, so VIX goes down, SPX goes up. Yesterday, what happened was the VIX went down and the SPX went down. All right, that really doesn't happen that often. You can go back and check it out. It's not an occurrence you see a whole lot. And so what does that mean? Well, basically, that's very bearish. All right, and so on the next day, you can see how the market did drop. It's dropped quite a bit today. It's down about half a deviation or more, depending upon which indice you're looking at right now. And but it gave you a good short clue. Also, it's bearish as the market really turning down, so possibly going back to fill in those gaps from right at the beginning of the year. But again, just look at that right there, and you can see VIX down, SPX down. Something's not lining up, and market's crashing down there. So market went on down. Even now today, VIX is up and the SPX is down. That's what you would expect. But when this happens, you should expect the market, usually, from what I've seen, and you can feel free to go back, test this out, check it out, see it for yourself. But when the VIX drops and the SPX drops, usually you're looking for a market drop shortly thereafter, maybe the next day, or maybe a very large drop over the next week or two. But that's a very bearish indicator. So it's sort of an anti-divergence. You should expect a divergence. This is more, like I said, your anti-divergence indicator right here. And so when you see that, just one of those new little things I thought I might point out today for you to check out. Be watching there. You can pull that up on any major charting platform where you have access to them. And let's see here. Let's look at a couple other things. What do we got going on in the news today? Looking on over at, let's see here. We had the Italian unemployment rate came in at 11.1. Wow, that's better than expected. It was 11.2. Okay. The Frank unemployment rate came in at 3, was expected to be at 3, and that came out last night. And then let's see here, we had the trade balance from Aussie dollar. So that, always like to look at that report. So let's go ahead and just pull that on up. Look at the Aussie dollar. And let's back it on down and check out some short intraday charts right here, going into 10 minutes. And we can check out how that report played out. Came out at 7:30 last night, 6:30 Central Time. And so if we go over here, then got to go over 18:30 right there. Report came in negative. They expected it to be negative 2.21 billion. It came in at negative 2.64 billion. So that led to a pretty simple, pretty easy Aussie dollar short trade. And you had plenty of time to actually hop in. It wasn't like it just bam dropped. So it just edged its way on down. It actually did pull back up, but it edged its way down first. And again, that trade that you could have easily, taken advantage of last night, it moved down to pretty much this 0.7 deviation level, it looks like, if you look at last night's deviations. And let me see here. I'll pull these up for you. Right in here. So we can see it came on down to 0.5, then to 0.7, almost touching one deviation before coming back up. And basically, you could say filling in the gap if you wanted to. But filled on back up there, went back up to yesterday's settlement price before pulling back down, now pushing back on the 0.7 deviation. So you had a great trade set up. You had a good profit target, like I said, 0.5 or 0.7. You could have traded Forex for that. You could have traded binaries or spreads. Of course, my preferred way of trading is the spreads or the binaries. And hopped in and, went short on the Aussie dollar last night. And but a very simple report, negative report, gave you time to get in. Unlike a lot of reports, the market just moves and it's done, and it just trailed on down and then gave you an easy profit target with the diagnostic deviation levels. We do post those again every single evening, and so you're able to get access to them. They do come out, before that report there, right before that report, and so you're able to, hop on and basically see what the deviation levels are. And I'll throw those up while we're going over a few other things so you can check them out. Let's see here. Go in and I'll pull it on up. All right, so right over here, and diagnostic deviation levels. Look at current deviations. So right there, and we can see the Aussie dollar levels along with all the other major levels right there. Okay, so with that, let's go ahead and check out what else we had. But easy Aussie dollar trade, and if you haven't traded on Nadex, I do recommend hop on over. Just go literally straight to tfnn.com. Okay, click on Nadex. When that comes on up, then go in and you can either go to set up a demo account under our products, demo account, and then fill in your username, first name, last name, phone, email address, click apply for demo. And there is a trick on getting this demo extended. If you want to notice, email me here at dmartin@tfnn.com. But also to get access to an account, click create account. And then you can go from start to funded in about 5 minutes. Okay, again, that's start to funded in about 5 minutes. Just click that. You get access to everything. No platform fees, no data fees, no commissions, nothing like that. Just exchange fees, because you're actually a direct member of the exchange. They are a regulated exchange, registered with the CFTC in Chicago, backed by a very wealthy company that's publicly traded. So anyways, check it on out, and you can go and you can play the binaries, you can play the spreads. It's a lot of different ways that you can trade over on Nadex. All right, so with that, wrap up there. Oh, and if you have any questions, don't hesitate. Go ahead and give me a call. You can reach me right here at 877-927-6648. Again, that's 877-927-6648. And I don't know if you've noticed it yet, but how would you like some free silver? Well, if you'd like some free silver, check out the Super Silver giveaway over on Tiger TV or on TFNN. And at TFNN.com, we got the Super Silver giveaway. Just click here to enter. And they're giving away basically, free silver. So from January 28th to February 1st. So go ahead and enter right now and get your chance to get in on the Super Silver giveaway. And you'll get access to be in that drawing. There's nothing to buy, and you don't have to jump through any hoops. Just fill in your entry form, and we make the announcements. It's a lot of fun. I know we gave away a whole lot recently, and we were announcing them like almost every hour. So make sure you definitely hop on there and fill that out. And let's see, what else do we got going on? All right, so catching on up to today, we had retail sales over in Europe. We can go ahead and pull up a euro dollar. Let's see here, pull that up, and they did come in worse than expected. That helps if you type it correctly. All right, so showing my charts over on Tiger TV. And euro dollar right here, let's see, report came out at 4 a.m. Central. And didn't see a massive move, but again, you had time to get in on this trade. So retail sales were worse than expected. Unemployment came in at expectations. And then at 6 a.m., let's see, that was 4. And so then at 5 right here, we had another report come out. That was the German factory orders, which came in worse than expected. So you had literally, one that was neutral and two negative reports coming out of Europe, all within the same time frame. Plenty of time to hop in a trade, okay? And you could have hopped in there, and you had, it literally moved all the way down to one deviation, so you had perfect setups going on. And you go in here, and literally early this morning, it goes down, it hits the 0.5, it hits the 0.7, does a little bit of retracement, goes on, and hits the one deviation, pretty much to the tick. And let's see here, what we got on a low? Let's check this. Low of 1.3056, 1.3057. So one tick away, I'd basically say that hit it. So I gave you a great target and a great reason to go short the euro dollar, at least for a short time frame, and then tightening your stops as it passes through each major deviation. Then popping on through here, we can look on down what has come out of the U.S. this morning. We had a couple little reports, nothing that major. Consumer credit does come out. That's considered a very minor impact report. It comes out at 3 o'clock Eastern time. Then there's a couple other small reports. Then we're going to have retail sales. Again, another Aussie dollar trade setting up tonight. Check it out. 7:30 p.m. Eastern time. Okay. And so that's a retail sales number. And you can go through and, look at, December 2nd, November 4th, October 3rd. Basically, it comes out, basically monthly, about 35 days after the month is over. And so you can check that report out and see, sort of how it's done. It was negative last time. It was positive the time before that. And you can see, did it move fast or did it give you time? So those are some of the best reports. If you can find some of these FX reports that give you time to actually hop in the trade. So some news reports, you got to straddle because they just move so fast that you don't have a chance. But the ones that actually do have some negative information come out, it does give you a chance to hop in and do short-term trading, like, that same day trading, where you can hop in and take advantage of it. And you could do something like the daily binaries, so you have plenty of time to be right. So it would be one way to do it. You could also use the spreads, and there's a variety of different spreads that are available to trade, and just depending upon how far you're going for, and how soon you're getting in. But especially when you're able to hop in there, with very little time right there and expecting that move, then you can take advantage of it. Also, they're going to have Aussie's going to have the new home sales month over month come out, but we're not quite sure when that report's going to come out. It's sort of a not detailed event there on the actual release time. And let's see here, pull this up over here. And okay, so that gives us the summary right there for really today. And when we look over at a couple other reports, let's go ahead and check out some of the deviations in different areas and ways that you can trade them. And we'll do that here when we come back. And again, I just want to remind you, the deviations are based on implied volatility. They're not standard deviation based on historical volatility. They're not pivot points based on yesterday's price action. And they're not ATR based on an average of historical price movement. We're going in, we're taking the implied volatility out of 16 different options and then tying that into a specific intraday movement formula to let the market tell us how far the market's going to move. We'll go into those levels more when we come right back from this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, welcome back here to the Diagnostic Trading Hour. We talked a lot about deviation levels and going in, just looking at the charts and seeing what's going on. And I want to go ahead and pull up, one of the things that just waiting on this to come my battleground again. And we're getting pretty close. Notice just this choppy movement right here on the Euro franc. If you back on out and check out the daily bars, you can see where Switzerland is defending the franc's value no matter what. Right here. So, it's one of those things. It's a great thing. You go and you can set up an alert on something like Thinkorswim. It's like, hey, if this gets below like 1.2020, take notice. You may want to say if it gets below 2040, 2050, take notice. And it's a potential trade that you could take advantage of while you're, trading Euro franc. And, the thing that's going on is Switzerland is trying to defend its currency with all the devaluing and everything that's happening right now in the marketplace. And, they basically are just sick of their currency having so much strength that it's messing up their imports and their exports and, everything else that they're looking at doing. And so just, one of the many things that you can check out and look at as a potential trade, you can go in here and you just go in and scalp this thing. The bid-ask spreads do widen out quite a bit, so there's not necessarily just a ton of trading opportunity. But you can go in there and just get small trades. But just keep that one in your back corner. Okay, back pocket, whatever, not back corner, back pocket. And, if the Euro franc does get back down there, that's something you can check out as a potential trade. Now, of course, have a stop in there because who knows? The thing could just, fall off the ledge. But it is, one of many trades that you could look at. And So let's see here. Let's go in and see what other charts we can pull up and look at. And we got silver and gold. The floors are about closing up right now. So I'll pull that one up for you. We'll go in and look at a smaller time frame. Let's see here. All right, and pull that up right there. There we go. All right, so silver, gold and silver both looking like they're moving up pretty strong. Looks like we have a call right now coming in. Tom from Tampa calling in about currencies. What you got, Tom?
Hey, how you doing there?
Hey, I am doing great.
Show,
how are you
man.
doing? Huh?
Good.
Oh, thank you.
I love your show. Yeah, I saw you
Sure.
on Bloomberg there. You're advertising the other night. You had an awesome commercial there, too.
Thank you.
Nadex. Yeah. Hey, currencies. I mean, I'm learning more about currencies all the time. I've been listening to TFN a long time. I mean, outstanding programs they got. When they brought you on, I thought, what another great addition they had. What
Thank
can
you.
some of these spike up? I mean, can some of these in a given day, a day or two, spike up? I mean, what are some of the biggest spikes you've seen as far as currencies?
Well, pound yen is the most usually historically the most volatile currency pair. So it all. I mean, the thing is, what you want to do is you can go back and for just like historical volatility, you could look at something like an ATR, like a 20-day average true range indicator. But are you talking about like intraday spikes where the market spikes against you?
Right.
Like in seconds. I mean, yeah, you can see like 20 or 30 pips sometimes. So, I mean, just like, and I'm talking about the out of nowhere spikes. And usually it's on the yen when it goes a little bit nuts. But, usually your spikes are going to be focused around your news reports.
I mean, some of these are capable of doing 700-800% in a given day is what we're saying on some of these spikes?
Oh, yeah. Yeah. So I went on today and and you don't even have to have a massive spike to make that much money. I went in today and I put in a trade not too long ago, actually, earlier this morning around 11 o'clock. And I went in and I put on a trade, had less than $20 risk and made over 80. I want to say it was, my actual risk on the trade was $18 and made $92 or $82 on the trade. So, I mean, you're talking over 400%. And I did that in less than 5 minutes. So, and that wasn't even on a big spike. That was on like a 4-pip move. And so, I mean, the binaries are awesome if you know how to use them. So
yeah, evidently this person done a lot of currency trading over the years. Obviously, I mean, I saw this guy's house; it was just unbelievable. And he was saying that, like I've heard you say it too, that you don't have to have much capital. It's not like stocks; you don't have to have $300,000. I mean, you can have a small amount of capital and get some pretty good gains in this with what you guys are doing there.
Exactly. You can go in here and with very little capital. I mean, like one trade was $18. So I mean, you could have done one, or you could have done 20, or you could have done 100. And $18. I mean, that's your margin. That's your risk. You can't get stopped out. And
right.
I mean, I'll pull it up. I'll show you. I don't have you logged into Nadex yet and checked it out?
I'm going to though.
Okay, awesome. Let me pull it up. I'll show you some here. Let's see. We'll look at currencies. I'll pull up. We'll just look at pound dollar. Okay. And so right here, actually, you got the binaries and the spread. So let's say a pound dollar goes below 1.6054, okay, in a very short time, or 1.6044. You're risking $6 on the trade, and you can make 94. Stay right there. I'll talk to you a little bit about some of the different ways that I trade the binaries and the spreads on Nadex. All right?
Sure.
All right. Be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin. We have Tom on the line from Tampa to talk about the currencies and the opportunities over in Nadex. And Tom, you were just talking about the huge profit potential in a lot of the trades.
Right. Yeah, some of the spikes that these currencies are capable of doing sometimes. I mean, I couldn't get over the amount of capital this guy was using. I think if he said sometimes $200 or $300, he was pulling off $10,000 in profits. So just something like incredible. Yeah.
I mean, it's absolutely insane. You can hop in here and put in literally very low risk. And the thing is, you can go in, you got the binaries will have you like absolutely massive payouts. I mean, if I go in here and I wanted to risk $200 on this trade, that'd be a little much. Let's see here. I gotta get quite a few. There we go. Keep going it down even further. Okay, 30 of them. I mean, that's on that trade. That's $108 risk, 28.20 profit potential on that one trade on the pound dollar. Now, obviously, you're not just going to go in and throw caution to the wind on market spikes. But what Nadex has done is they've added in 9 strikes, and this is probably one of my new favorite trading strategies over in Nadex. Over on Forex, they put 9 strikes in on the intraday binaries, the ones that are only 2 hours long. And they made them really, really tight. So if you go and look at them, they're only like 10 pips wide. Okay? And since they're so narrow, you could literally have a 3 or 4 tick spike and make that kind of return on the trade. I mean, the trade we're talking about right here isn't that far away from where the market is. I mean, this is the market's at 605.1, and this trade's at 604.4. We're talking about if it drops 6 pips, this trade makes $2,800 on $180 risk. You know,
Wow.
I mean, which is just insane. We're not talking like any kind of massive risk. And again, if it flies up 20 pips, we only lose the 180. You don't have to be right that often, and you still come out ahead with those kind of odds on there. Now that's one way to trade them. I actually do really enjoy doing this. I've actually been doing it more and more and more over on Nadex, where I go in and I'll trade these short-term ones. I didn't used to trade the short-term ones that often until they came out with all these new strikes, because it made it where you had just a ton of opportunity. Before, the strikes were a lot wider, and so the risk-reward wasn't necessarily there. But now the risk-reward is there. Also over on the indices, I don't know if you do trade those or not, but like on small cap, I mean, they're only at 1 point wide on the strikes, on the intraday strikes. But I don't know if you've checked it out, but the spreads are fantastic. Let's say if you're going in and you're just a normal FX trader, okay? You just want to trade the charts. And you can go in and you can trade the spreads. I have like the scanner over here that shows you the different trades and, you know, how the trade works. But for instance, you know, this trade right here, let's say you want to buy the pound dollar right now. It's starting to bounce off its 1.5 negative deviation level there. And you're going in, you're risking $15, okay? And you'd be putting in, you know, a couple $100 easy in margin on that trade. And let's see here, and to make a potential 131. Now, it doesn't mean that's your profit goal. Like, you're not realistically going for $131. Now, in binaries, you can actually make the full profit, okay? On spreads, I mean, it has to actually move it that far for you to make that profit. And so that'd be moving, you know, all the way up to, you know, 61.90, which I really don't see that happening today. But it's still, you can go in there and you can trade FX just like an FX trader trades FX. But you don't get stopped out and you use less money. And I mean, on this one, it's only 4 pips to break even. You know, here's a trade right here, short pound dollar, and it's a $1, or sorry, 1 pip move to be break even. Is only $51 risk, $245 profit potential. Well, to do that exact same trade on the pound dollar right now, you would go in and you put up quite a bit more. You'd go in and I mean, it's trading pretty much on par. Look at that, 0 pips to break even, 605 ones where the pound dollar is quoting. So it's trading right on par with the pound dollar. And instead of putting up a couple $100 in margin, you're only putting up $50 in margin. So you've already multiplied your buying power times over 4 times the amount. So now you're at over a 200 to 1 buying power. You know, pre the old, remember the old FX you know, margins where you could get 400 to 1 and everything else. Right. Now you can actually sort of get back to that. And but also, like, if the market could go against you by 50 pips, you wouldn't lose more than $50. You know,
wow.
So which is just what I love is it could go 100 pips against you and you wouldn't lose that. You know, in this trade that's
no doubt.
Risk of only $5. I mean, you can only lose $5 on the trade. And I mean, it is important that you do trade them correctly. One of the big things, that's of course important with any trading instrument, I guess. But you know, one of the things people, they'll walk in on these trades and they'll go in, wow, I see the low risk, and they'll just hop in and they'll grab the trade. But they won't necessarily look at all the other factors. So you do need to look at how long you have till expiration. You know, so like on here on the scanner, it's showing trades that have 80 minutes till expiration. And then, you know, do I have enough time for the trade to move? I mean, if you get one that has 5 minutes till expiration and it has to move 30 pips, you're probably, you know, just asking to throw some money away. So first I look at time. Do I have enough time to make the move that I'm expecting? The second thing, and this is whether you turn to binary or spread. Then now on the spreads, you need to look at break-even distance. So like the difference on the quote, how far does it have to move for me to be at break-even? Because, you know, like this trade right here, I mean, it's only a $5 risk, but it has to move 52 pips to be in break-even because it's way out of the money. So that would, just because it's $4 or $5 risk doesn't make it a good trade. You know, and I think that's something as traders we walk in and we're like, oh, low risk, that's a great trade. Well, you know, you got to look at all the different settings, you know. Mm-hmm. And I'd much rather risk $16. Even though that's 4 times the amount. I mean, it's still only $16. But because this one only has to move 4 pips because it's already, you know, in the money. If I highlight it right there, you can sort of see it'll bring up that one spread or that one chart right there. And you see that, like, this line right here is the live price of the pound dollar. Yeah. So you can go in here, and if you buy it here, basically it's already in the money because it's in between the floor and the ceiling of the spread. And you're only risking, like I said, a very small amount of money to go in there and trade it. So you can trade off the chart just like you trade.
That's the beauty of it right there.
Yeah. And but if we go in and look at this one, you know, which somebody could easily be fooled and think this is a better trade because it's only $5 risk. See how the price is way down here? So it has to move. This is the live market price on the pound dollar. So it has to move up here before it even gets to break even. So I like this trade because it doesn't have to move that far at all. So if I'm buying the pound dollar, that's definitely the spread that I'm going to buy over on Nadex. And then the same thing on the sell side. And you can do this on, I mean, there's a variety of, you can do it on Aussie dollar to dollar, pound dollar, and then, US yen, pound yen, euro yen, US Canadian, US franc. And so you got plenty of different trading opportunities. And but on the spreads, that's the biggest thing. Is check your distance to expiration along with your expiration time. Then look at your risk. And then once you've looked at your risk, and a lot of times we see examples on this. Let me see if I can find one for you. And you want to find ones that was similar. You want to look at your risk and your reward potential. Okay, these two right here. Every once in a while, I'll find just like the perfect example, and they do come up pretty much every day. So I just gotta be on whenever they're on. And let's see. Okay, here we go. Here's a great example. All right, this is on the U.S. small cap. Okay, and if you're looking at the spreads, notice how they're both 153 minutes till expiration, and right here they both only have to move down for 4 pips. So not a bad move right there. Only $45 in margin, only $45 in risk. But this one has a $151 profit potential, and this one has a $251 profit potential. Now, do I think that the Russell is going to drop down to 845 today? No, I don't think that's going to happen. But who does ever think that's going to happen when it does?
Exactly. Right.
So why would I want to give up $100 in profit potential when I have the exact same risk, exact same move to break even, exact same time to expiration? There'd be no reason to trade that trade. And so that's why that's why I made this tool, because I'm like, I want to find the best spreads in seconds. So on spreads, that's a basic thing. It's just expiration, then break even distance, then risk, then what's your risk reward ratio. So which was basically the best use of your money. On the binaries, which the spikes are a lot of fun on binaries, because you can go in here and trade the news. That's probably one of my favorite. This is one of my favorite strategies. I have a few others. I love trading gap trades with gaps and with the spreads and binaries. Have you ever traded the gap fill trade before, like on the indices or even on FX pairs before?
No.
Gap fill trade, basically, the logic behind a gap fill trade on a U.S. index is when the market closes at 415 at one price the previous day, okay? And then it reopens the next day, usually the gap fills. So I'll pull up an example. I think we had, like one this morning right here. And we'll go in, and you can use any platform you want. I'm using Thinkorswim right here. It's nice and fast for the show. And it's not a big gap, but I think we do nevertheless have a gap right here. Okay, and let's drop down to daily. Don't know why it's doing that, but okay. Here we go. There's a huge gap over there. And so right here, doing a little bit more. It's give me some weird right adjustment. All right, see where their market. Okay, you can see. I mean, there's all these gap fills. All right, check this out. Market closes at 871.5. Market opens at 878.7. So the market closed at 4:15 Eastern. The market opened at 9:30 Eastern. Market goes down and fills in the gap. Same thing over here. Market closes, market opens, market goes up, fills in the gap. Market closes, market opens, market goes up, fills the gap. Okay, so that's all a gap trade is. The reason a gap trade, the main reason it works is because there's all these limit orders sitting there for all the stocks that haven't traded all night. Okay, because the market gapped, it never filled those limit orders because it has to be at this price or better. And so the market goes back up to fill those orders. Often it'll reverse course after it does so. Like it went in, it filled those on the small cap 2000, dropped back down. Even over here, you see how it went down, flew back up, came back down. But what you're doing is you're trying to get in on the open, and you're fading the gap. So you're shorting to fill in that gap, and then getting out. Same here, getting in on the open, buying, and then you get out when it fills the gap. The issue with the gap trade is you could have went in short right here, and it could have went way up against you and then came back down. And but with Nadex, you don't have to worry about that issue because your risk is capped, and you have till the end of the day to be right. And so it's actually, to me, it's the number one best way on the planet to play gap trades. I don't know why anybody would ever trade a gap trade with a regular future contract or a forex contract again after having something like this, because you can fade the gap without ever being stopped out. And gaps fill. I mean, we just looked at a small sample of time, but I mean they fill constantly. And if they're more than a deviation, I don't ever take them. So that'd be like one I wouldn't take. This one I would have taken. It probably would have lost right there. But you can see just, all these little gaps right here, and the majority of them on the screen we're seeing, we didn't have a whole lot last month, but a majority of the gaps do fill, time and time again. And so that's a cool way to trade that. And you can even do that over on, Forex as well, just looking at basically the futures close And let's see, let's say if you're going on futures, we'll do 6E right there. And then I got to get that setting off where it's zooming in on the right side. There we go. And you can check out, there's a massive gap fill right there. There's another gap fill. Today hasn't filled yet. There, the gap filled there. Huge gap fill on the second there. First trading day of the year, massive gap fill. So there's a lot of possible gap fill trades you could do. And the thing is, the risk reward can be fantastic. You can go in for, $10, $20, $30 risk. And now what I usually do, my strategy is I'll go in on the binaries or the spreads. If I'm going on the spreads, I'm getting out when it gets there. If I'm going on the binaries, I'll select the binary that's right at the strike of the gap fill. So if I was going in on Russell this morning, then what I would do, and I did a bunch of trades this morning, but if I was going on the Russell, then I'd look at the closing price. Okay, and really I would be looking at the settlement price. But let's see here. The closing price was 874.2. Also, like I said, I like to check the settlement because that's the actual number that the big boys are using. But let's see, small cap 874.2. So it came out to the same. And then I'll go over to Nadex, and then we can look at the binary to see how this trade would have worked out. And this would have been a pretty tight gap, so that's why I didn't take it this morning. But it's not a bad trade. It's just the risk reward probably wasn't there. We go down to 874. Let's look at it. And you can actually this is a very helpful feature in getting to know Nadex, is using these charts. Now, understand, except for the FX charts at the bottom, the charts are not of the underlying. So this is the chart of the binary or the chart of the spread. But it lets you see how they work. So if we go over here, then what you can see right here in the morning, there we go. Sort of watch where the market opened up at 9:30 Eastern Time. Okay, so we got about 9:25, 9:26. So right on the open there. Then you could have bought it for about 43.50. So I probably wouldn't have taken that trade just because the profit wasn't there. Meaning, I wanted it to be 2 strikes away, so it wasn't 6 points away. But so I'd be buying, but just to give you an example, I would buy the 874 and then I'd sell it as soon as it fills the gap. So on this trade, you wouldn't have made that much money. You would have made a small profit on the trade. But on any trade, as long as it's not bigger than a deviation, we post our deviations over here, so like 10.7, and as long as it's at least 2 strikes wide. By strikes, I mean the distance between. So see how these are 2 points wide. So basically 4-point gap, but not greater than 10-point gap. And then fading it, buying the strike, or selling the strike and exiting when it gets there. That's another favorite way I love to trade them. So there's a lot of cool ways to do it. You can even, like I said, even do it on the FX. But how long have you been trading?
Oh man, back in 1985. I've been trading stocks and everything since about 85.
Wow, sweet. So you've been around. You've seen a lot of different crazy things going on, huh?
Oh yeah, crazy Black Monday, man. I gotta hate it, guys. I was there on Black Monday, man. I go way back. I've been listening to TFN for years, ever since 2000, whatever. But he's got a great program that he brought you on. I started getting my head wrapped more around the currencies too, and that's what I love about it. You don't have to have much capital and versus stocks, but I've had some nice home runs with stocks,
Awesome.
And, but anyways, I appreciate it, and Darrell. And have a great day.
Hey, you too, man. Thanks for listening. Appreciate it.
Bye.
Bye.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this prospectus and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Just checking out a potential trade right here set up. But I want to see it move it down and get a little more negative volume before I hop in on the trade. But let's see here. We got, let's see the USN right there. All right, let's go ahead and look at just a couple of the deviations and where the markets are settling out right now. We got the US yen right now, the pair I'm looking at. Went down to one deviation, almost hit 1.5, and now it's just sort of oscillating right around that one deviation mark after hitting a 0.5, negative 0.7, and 1. Notice that oscillated at each deviation level before moving lower. And then we can go over here and check out a couple of the other pairs. We got a euro-dollar right here, and basically went down a perfect full deviation before pulling back. And so gave a great reversal trade right there off of the full deviation. That full deviation is basically the most we expect the market to move. It may move further. And so we will tighten stops, and you can always reverse after a stop is hit. Don't just reverse because it hits it. So make sure it actually starts moving in the other direction. But, definitely a trade to look out for. Looking over at the Aussie dollar, we had the Aussie dollar pull down to a 0.7. Didn't quite hit its one deviation mark today. but definitely did hit that 0.7, gave you a good trade setup off that report like we discussed earlier. Looking over at the U.S. Canadian, dropped down to a 0.7 deviation after first going up and hitting a 0.5. So 0.5, then down to negative 0.7, which would be a full deviation move. Some people don't think about this, but if you go from 0.5 to 0.5, or 0.5 to negative 0.5, that's a full deviation. Half and half equals 1. So we did have a full deviation move. It just started off a little bit higher. And then looking around and checking out a few other things, we can look at some of the U.S. indices right now where they're all sitting at and sort of oscillating around at the moment. But we had the S&P move on down to 0.5, then 0.7. It's moving up, and right now it's sort of battling it out right at the negative 0.5 deviation. Let's check out the other indices, maybe get a little insight into the end of the day. We got the Russell right now, which has moved on down. It hit its 0.5 deviation level. Has not yet hit the negative 0.7 deviation. We'll see if it does before it's over. So, basically we're looking for any kind of movement between 874 and ideally down to about 866 if it does decide to move down. But right now it's just oscillating after hitting that half deviation move. Not a whole lot of clarity at the moment. Checking out the NASDAQ. NASDAQ, we had a move, went on down, and literally just bounced right off the 0.7 deviation move before pulling back, along with the other indices. And so not seeing any huge moves, but definitely a potential reversal right there, just looking at the overall market movement in the current trend direction. And now checking on over, looking at the Dow. So the Dow has moved down to 0.5, then to 0.7, and has bounced back up, and now again is also oscillating at the negative 0.5 deviation. So we're just basically just watching at the moment. There's not a whole lot going on. See if we can get a little action here at the end of the day in the markets, and we'll just follow them and just see how it goes before it's all over. But that's a quick summary on the deviations for the day. For news, just to see what you got coming up tomorrow, I want to make sure you're aware. Is don't forget tonight, 7:30, got a potential Aussie dollar trade. Could play that sort of like the one we discussed first thing. Check out the archive if you want to go back and look at that. And that'll be up a little bit here in a few hours. You'll be able to check that out. Tomorrow, we're going to have trade balance out of the pound. But it is considered a medium impact report on the pound dollar, but definitely one worth checking out. That'll come out at 4:30. And just like we had some reports come out today that were on the euro that were medium impact, and they would have worked out quite well. That could work out well for you. Also, at 5 a.m. Eastern Time, the final GDP out of Europe and the bigger number, the German industrial production, month over month is going to be coming out at 6 a.m. So there's a pound trade and a couple euro trades. Be careful on that pound trade, though, because when those euro reports come out, mainly the 6 a.m. one, it could have an impact, of course, on the pound. Going over and check out crude oil inventories tomorrow at 10:30 Eastern Time. And that can be a great way to trade the oil contracts over on Nadex, just like we talked about on Forex today, with limited risk, and you can't be stopped out of the trade. And that'll get you through to tomorrow. We'll see you right here on the Diagnostic Trading Hour. And thank you for listening. And stay tuned. We got another great show coming right up for you.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.